Overnight, we've seen Japan rocked by a big aftershock following their earthquake a month ago. This time it was a 7.1 scale aftershock, and the epicentre was 160 kilometres north of Tokyo. So a tough challenge for the Japanese people, and our thoughts go out to them. You can be forgiven for thinking that the world's having more than its fair share of natural disasters at the moment. They're certainly grabbing plenty of headlines, both here and abroad. But in actual fact, research shows that these sorts of disasters do happen all the time, so much so that in fact you can calculate what sort of impact disasters will have every year on global growth. And normally forecasters skim about 0.2 to 0.5% of their global growth forecasts to account for natural disasters. Now, what makes the Japanese situation a little bit more concerning than usual, though, is the nuclear situation, firstly. In the first instance, because of the obvious fallout and health repercussions because of that. But secondly, from the massive disruptions that it could have to their power system, and in turn, the impact that could have on Japanese production and supply chains, both in Japan and abroad. So the Japanese situation is certainly fairly concerning, and we'll be monitoring that closely over the days, weeks and months ahead. Now, that did feed into a bit of a negative mood in global markets overnight, and we saw not much in the way of appetite for risk. And in that environment, we've seen the usual response of shares weakening and currencies such as the New Zealand dollar easing somewhat. So New Zealand dollar's trading just below 78 cents against the US dollar. We're still pretty strong against the Aussie, trading around 74 cents there, and we've seen share markets come off. So we're about to go into reporting season in the States. Alcoa reports after the bell in America today. And so that'll be the big focus over the weeks ahead for equity analysts. But at the moment, we're seeing a bit of a down day in shares. For commodities, that risk aversion's feeding in there a bit. We've seen oil prices come back, gold prices are down too. But for gold, it's still $1,400 an ounce. Oil's around $108 a barrel. So we're still seeing really expensive prices for commodities right now. Incidentally, the IMF put out some global growth forecasts last night. Still quite strong growth forecasts for them. Despite the uncertainties that we've seen, they've skimmed a little bit off their US growth forecast because they are weak and because of the weakness we've seen there. And they're also discussing some of the very strong inflation pressures that we're seeing in emerging markets right now. And a lot of that is the commodity story that we've been talking about. So for today, we'll be looking out for REINZ housing data. That's due any time this week. And across the Tasman, we've got business and consumer confidence surveys today and tomorrow. Beyond that, the big focus is going to be in offshore markets. One of the things we're looking for is an economic sentiment survey out of Europe tonight.